on the screen, so I don't even know what I'm talking about.
The lights are bright tonight.
Oh my gosh.
Deep in the heart of Texas.
Oh yeah.
Welcome everybody.
How you doing?
Good. I'm glad you could make it.
Man, I just sat down like 2 minutes ago.
You guys got to know
20
that
seconds ago.
Eddie Gant works harder than anybody I know. We do this thing every month. It's the third Wednesday, right?
Mm-hmm.
And we know when it's going to be.
Mm-hmm.
That damn Eddie Gant rolls in here about 5:57. I'm looking at a house or signing some papers or doing something.
I learned a long time ago, you cannot make a grand entrance if you're the first one to arrive.
But we didn't want you to come anyway.
I'm the first one to arrive usually.
That's fine.
So I'm not making any grand
good
entrance.
to see y'all. Man, it really feels like it's been a long time. It feels like usually the months kind of go quick, but it seems like it's been a long time.
I think the way the world is now, you just don't communicate with your buddies like you used to because you don't have other occasions to see each other. You know?
Yeah.
Maybe. What are you working on out there?
Yeah. A lot of different things, to be honest with you. I mean, we're going to dive into it. I don't want to just kick it off and have the run back for the touchdown at the, first 2 seconds. So we'll build into it. But this is your show, brother. This is your idea. You're the director. You're the maestro.
I was maestroing. I was asking you what you up to? What are you working on? What are you up to? What's taking you for? Oh my gosh, 6 women texting Eddie. Saw you with your shirt off.
The most highly rated show we ever had. So I took my shirt off. You know that. So
hey,
I reposted it.
So I did it again tonight.
Honestly, I prefer low ratings, to be honest.
No, you don't. No, you don't.
Rich, you just closed a loan with Jet?
Oh, I'm in the process of doing one.
Okay. You're getting ready to close.
Yeah.
I closed one last month.
The one thing I'll say is, I've always been real good friends with Eddie and Johnny, and I like a lot of the people that work there, but the process has been smooth. They're bugging me. Hey, do you have this? Hey, this is next. Here's what to expect. I really appreciate how smooth the process is and how they don't react. They're proactive.
Okay. And what are you investing in? What are you buying?
I'm buying a little house down in West Columbia. So let's talk about some other stuff.
This was interesting.
About this.
What are you doing with, what is it called? It's called a pad site?
Pad split.
Pad split.
So if anybody's
I've never heard of
this company, they're 8-year-old company maybe, but
Atlanta, aren't they?
Yeah, they're out of Atlanta.
Are they European company? But the U.S. headquarters is
I don't know about that. The CEO's name is Frank, and he was a Naval Academy graduate, so he's as American as you can get.
But they Atlanta based, and they moved into here and
just
I went
recently.
to a presentation on them.
You did?
I did.
Yeah,
I have never heard of this. This is
Frank,
the first time I've even heard of this.
Frank then. Frank told me he met you. Frank Furman. He's the boss.
Yes.
Yeah, so he and I have talked a couple of times after I got introduced through AG. At
AG was
Real
on
Acquisition.
last month.
Real Acquisition.
Yeah, he was on last month on the podcast.
And I do appreciate that. And we're working out a deal with Renter's Warehouse to be the property manager for the houses that they put on pad split here, where pad split, it's an interesting model. So you know how a college kid rents an apartment. They rent a room and then they share the common area and they have their own lease. And then each roommate is just responsible for their portion. The mistake that I think they make there is they charge them a prorated amount of the utilities.
Okay.
Which in my opinion is not very smart because you've got, Sally bringing her friend over. I just had a friend whose daughter moved out of their apartment because they kept bringing friends over to wash clothes, running up the bills, and they split it. So pad split models, bills are just included and charge more rent.
Right.
You lock down the AC controls anyway, so they can't put it on 65. But you take a 4-bedroom, make it into a 6-bedroom, and rent each bedroom.
So how would you ARV a pad split model if it was let's say it was currently running at capacity?
That's a good question, and it's a unprepared for question, but I think I got an answer.
Good.
That at least makes some amount of sense. We at Jet Lending, and just my own, investments, I have gotten bigger and bigger and bigger into DSCR, debt service coverage ratio.
Mhm.
So my first thoughts was I'd use a debt service coverage ratio, meaning, you know, you got to take your payment, multiply it times 1.3 or 1.25, be the debt service coverage ratio amount, and that's how much rent you need to support the debt.
Right.
Or you can do it in reverse. If you know what the rents are, you divide it by 1.3 or divide it by 1.25 to come up with how much debt those rents can support, and back into the payment, back into how much you can pay. Does that make sense?
Mm-hmm.
So you got 1.3 or 1.25 is a fixed number that you should use. So you either know rents or you know what you got to pay, and you use that formula to figure out if it's a deal or not, or how much you can afford to pay, or how much your rent's got to be able to afford the debt. So it's you go either way with the formula.
Yeah, and
so that's what. But back to your question, that's what I would do.
Okay.
I would
use the debt coverage ratio,
debt service coverage ratio, to make sure I have enough rents.
Well, and here's
to
your
cover
problem.
my debt, or enough, or back into
Well,
the
here's
other
your
number.
now.
Does that make sense what I'm saying?
And it depends on what you say with rents, because here's your problem with this model: is an appraiser is going to have to look at it, right?
Mm-hmm.
And they're not going to say, well, this $250,000, $400,000 property brings in $9,000 a month. Well, we'll just make it a $900,000 property today, right? They can't do that,
That's
right?
That's right.
So what the owner Frank and I've had talked about was you have to assume that it's a generic rental property, right? You can't just say, oh, well, this guy's doing this unique model, so we're just going to jack the value up $300,000.
That's right.
Can't do that.
That's right.
So you have to be. It has to appraise like a typical rental or a typical owned home.
Right. I
versus
agree with that.
Because when you get an REO, you're not doing that model. That means they've failed at whatever model. Airbnb brings in double, but that doesn't double the value.
Right.
And you're right. So evaluating the rents, the income on the property, I would not use the peak of the peak of the peak pad split. I would use a nominal rent of what this thing could.
When Joe Blow rents it out,
could support.
Yep.
But I would use that, and jet lending for underwriting purposes, we use 1.3. Most of your community banks, but again, community banks are a different animal. They're going to use 1.25, a little less than us, but they're underwriting to a much harsh criteria on income and credit than someone like a jet lender. And they use a 1.3,
and their appraisals can tend to be low.
That's right. They pat the appraiser on the back and say, "Get me low, get me low, get me low."
When I first started, 2000.
Am I coming in? Okay.
No, your ear's off. There you go.
All right. Sorry about
that. In 2007, 2008, you were doing these quarterly live events.
Mm-hmm.
And you said something that I never even, I didn't think about. I don't know if anybody new out there is thinking about this, but the way that this came up was Rich said, "Oh, I'm using Eddie for the first time." Mm-hmm. And then I asked what he was buying, and then he told me, about it. And it used to be a duplex. Mm-hmm. And so the more I'm seeing the real estate problems, the more creative people are getting to solve them.
You have to innovate, right?
Right. And you said a long time ago, a duplex, when I first started, a duplex does not bring as much value as a single family.
Not on ARV.
Not on ARV, but maybe in cash flow, it does.
In cash flow.
So that leads me to my next question. Yeah. What are you more interested in buying, cash flow or flips?
At the stage of my career?
At this stage.
Okay. Well, I would say long-term hold.
Okay.
Long-term rentals, which is your cash flow answer. But I don't buy long-term holds for cash flow, to be honest with you.
Okay. What do you buy?
I buy them for wealth building and appreciation. And that's the truth. That's
so even if there's
that's not a BS answer.
Right. Even if there's very little meat on the bone, but that place is going.
No, I don't agree with that.
Okay.
I still buy them with meat on the bone. I try to buy them with meat on the bone and with some what I call equity capture at purchase. And we got questions. Alex, let all these people know we're going to get to them.
Yeah.
We're just not getting to them, spur of the
Well,
moment.
you
But-
let them know.
Yeah. But anyway, I guess I did. So, I,
Type that in, Alex.
I mean, let me diverse my question. I look at that internet every day and all these groups and all these messages, and I'm part of, I don't know how many groups on Facebook. And it's occurred to me, and this is a sad thing, I don't want to bore people, but I'm getting old in this business, and I'm seeing these young guns come around, and I'm not jealous. I'm really not. I kind of like it, to be honest with you, because I like communicating with them. But let's face the facts. 2020, almost said 19, didn't it? 2020, it's changing world just like it was in 2008.
Oh yeah,
It's never
for sure.
been as many changes in our business as I think there was in 2008. And you and I both would knee deep in it, waist deep in it.
But remember,
today
too,
it's the same thing. It's a
2000
changing world.
but I think 2008 educated people like you and I to say
It did.
times are changing.
Uh-huh.
Let's not react. Let's back up and go, okay, what's happening, what might happen, and let's be proactive
Mhm.
and thrive in an atmosphere like
You
this.
got it. Don't get scared of it. Look at it and evaluate
How are
can
we
I
going to benefit
prosper?
from this?
How can I prosper? You say benefit. I
You
say
help other
prosper.
people
Same
too
thing.
at the
Yeah.
same time.
I feel like
prosper in it.
we paused and pivoted.
Yeah.
In 2007 and 2008.
Pivot.
And a lot of people today are pausing and still pausing.
Yeah.
And they're not making
Yeah.
any educated.
And I'd like to think I'm friends with more of these young guys than I'm not friends with. And I truly mean that. And I love to see their enthusiasm and their vigor. And it reminds me of me 20
Well,
years ago.
I'll have to say, Eddie, you're still like one of them. You still work way too hard.
Well,
You work hard.
I do it to a certain extent, but
No, You
but
work
that's all
hard.
right.
I don't know. I don't know if I can find one of those young kids that outwork you.
They'll outsmart me, but they won't outwork me.
Most
right?
of the world most of the world outsmarts Eddie Gant. Good Lord.
But they won't outwork me. But my
He ain't
whole
real
point
smart.
being, we're in this hugely changing world right now. And I remember back 20 years ago, sound like an old guy talking, said, I talked to the guy, it's changing. It's changing. And it was. It's changing like so. It's changing. But you know what? There's an old country song. The only thing that's consistent is change. There's always change, So it's kind of fun. And we hadn't had anything like 2020 ever. But it's not tanking the market. I got these reports here.
It's the
And
strongest
what
real
it's
estate
doing.
market I've ever
It
seen.
is crazy, and no one knows when it's going to end.
And no one
for residential.
expected this.
Commercial's not hot like this residential, but the residential is on fire. And I've never seen it like this. It's on fire.
Where are you seeing the most fire? Where would you
Well,
send the fire department
below the
over right
median-
now to put it out?
below the median sales price.
Well,
Below the median sales
I don't
price.
want to sound boring, but hell, it's all over for resident. This is a national article about it's on fire in all the major markets. In Houston, it's on fire, and it started slow in the high end, but it's taken off. And you look at the HAR report for the month, and it talks about the sales for under 100,000, under 200,000, and they broke them into 0 to 100, 100 to 200. Said it decreased.
What's your
Hold on. That's misleading. It decreased because there's no freaking inventory. There's nothing to sell in that market. So what is for sale, boom, just explodes off the market. But they say it decreased. It decreased because there's no freaking inventory. Does that make sense what I'm saying?
Yes.
You got to dive into what the data means, but everything else is freaking off the charts. 8.3% increase in average sales price, September 2020 over September 2019. That's another way of saying appreciation.
Okay, can we come back to that real quick?
Yes,
Let me ask you a question.
Yes.
John Bertle, I don't even know where he is. I'm assuming he's in Illinois. He asked, do you guys still lend in Illinois? Which that would be the first I've ever heard that you lend in Illinois.
We have capital partners. Now we lend in most states.
Okay.
But I'll be, frank about it. I mean, using our money for that quick close, we're Texas.
Okay.
For national, we have capital partners. Don't expect a 5-7 day close like you get here in Houston, Texas. It's going to be a little longer.
Number 2, this is a question for both of y'all. Trey Taylor asked, the 1.3 debt service coverage ratio, do you look for it just to be on the debt payment or the full PITI?
Oh, it's full PITI.
Okay.
Yeah.
All right.
That's a quick answer, wasn't it?
Yes. Okay. Now I want to jump back into something that.
Well, and think about the answer
Okay.
to that
I will
before you
not
do.
jump back into that.
That in Texas specifically, taxes are a bear. That could be a big chunk of your monthly
It
nut.
is.
So
It
it
is.
has to
It
include
is.
that.
Okay.
It is.
You were saying something about
Andy.
statistics and
Can I get
indicators.
another-
I need another water.
Another water?
Another water.
Statistics and indicators. What exact things are you looking for to get your gut feeling that the market is still on fire? What are those daily statistics that you're looking at?
Well, you want to go first? You want me to go?
The actives are at historic
Yeah.
lows.
Okay.
Months of inventory available, days on market, all those things are just continuing to accelerate.
What are other indicators that you're looking for to determine whether or not
Right.
the market is staying hot during
Right.
this month and
All right,
going into
let's
next?
slow you down now a little bit.
Rates.
Are we? Yeah. Hold on. Are we looking globally at a
No,
market,
just
or am
Houston.
I looking at that property right here? Because there's
Yeah.
different answers to
Ooh,
that.
that's good. That's good.
There's
Okay.
different answers to that.
Right.
Yep.
When I'm looking at that specific property, I'm not looking at global data. I'm not looking at whatever. I'm looking at immediate right around that property, the subject property. I'm looking right around it, and I'll start at a quarter mile or subdivision, and then I slowly expand out till I get the data that I need.
I think the gist of the question is, are we going to see appreciation in general for 6 months or 6 years or 60 years?
Kind of. I think my question was more or less like, I think everybody's looking at actives and everybody's looking at year
Days on
over year
market.
sales and days on market.
Mhm.
But in the day to day, what I'm seeing from market to market to market is that there is a slowing in showings.
Okay.
I don't know if the slowing in showings is because we're getting ready to go into the holiday season.
All right, well, hold on. You're in the slowest time of the year for retail sales, October.
Okay.
So that's one reason.
Okay.
But this September, first, you used to be this, and this damn thing won't stay on my ear tonight. Used to be. I know I got my Cool Breeze shades on, by the way, but you cannot name the brand, but you'll like them.
Folkley.
No, they're not Oakleys.
No, I said Folkley.
Oakley,
Fake.
not Oakley. Yeah. You know what these are?
Don't care.
Fay bands.
That's a trivia question for the audience. We give you 50% appraisal.
Some-
Oh, that's a good one. 50% off appraisal for anybody that can name the name brand of these sunglasses.
And by the way, typical
He
appraisal
beer.
costs $2,000. So he's giving me 50% of that.
All right, so let's go back
Yeah.
to the thing here to help these folks out.
I know. There's your water.
That might be the dumbest technician I've ever had in my life.
He spells agua, B-E-E-R.
Yeah.
Go ahead.
Anyway,
What is this world coming to?
where were we? I got stymied by that one. Okay. Where were we?
Okay. We
Help
were
me
talking
out.
about other indicators other than days on market.
Yeah.
And you were talking about it versus it being globally,
Yeah.
looking at just the specific house,
Well-
going out half a mile, going out
Yeah.
full
Wait.
mile.
We don't know, and it's a great question. How long is this crap gonna last?
Mhm.
We don't know. It is the craziest thing I've ever seen in my life. We're in the middle of this COVID, which I think is don't get me on a political statement here. Anyway,
Roy Ruda is asking,
hold on,
what
hold
is
on,
up
hold
with
on.
your
We're not-
indoor sunglasses?
well,
Real
I'm
quick.
I'm just doing it.
He's
tonight.
just
Be
looking
different.
cool.
He
Just
got
doing
his
it to
eyes
be different
dilated.
tonight.
He had
Just doing it to be
a
different
eye
tonight.
test.
There you go.
Eddie,
Doing it to be
you're
different
different
tonight.
without sunglasses.
Yeah. So I always come up here with my fat white bald head.
There's something
and
wrong with
talk
him.
smack, so I'm gonna talk smack with sunglasses on.
I love it.
There's something
So,
wrong with it.
Anyway,
He's got problems.
it's the craziest thing I've ever seen, and I really do. You can't look globally when you're evaluating the property, but if you do want to look globally, these appreciation rates are off the chart right now, off the chart. How long is it going to stay? Nobody knows. It's going to stay for a little while. I've always said, as long as interest rates stay down and inventory stays low, we'll have these great interest rates.
And look at interest rates. They're historically low.
Yeah.
And
Went
the
down
Fed's
today.
got no
Went down today.
the Fed's got no incentive of raising rates and messing up the recovery.
No.
And it's
That's
going
right.
to be a minute.
That's right.
And when I say a minute, I mean years.
That's right.
I don't see rates going up for several years.
I mean,
And that's not me. That's Mark Dotzer saying that.
Oh yeah. Oh yeah.
Because you
I mean,
can't just raise rates and slow down the growth.
You ask the average Joe out there, what's the prime? What's Wall Street prime today? Nobody knows. They know it's low. They don't know what it is. It's 2.25 is the answer to the question. But that don't have an effect on long-term rates. Long-term rates is based off the 10-year Treasury bill.
Yep. 10-year
Which is
Treasury.
a function of inflation. Okay, so those two, they may run in parallel at certain times and most of the time, but they're unrelated from a calculation standpoint. And most people don't.
10-year Treasury is all that matters.
Yeah, for the long-term rates. That is 100% correct. And, when, we had 08, we had the prior to 08 and the downfall in 08 was the subprime market collapse. You do not have a subprime market out there today. And I'll argue that point. People say you do because of the non-QM, but that's not subprime. Okay, and there's a key reason for that answer. But, the subprime collapsed and things went to crap. Okay, and rates shot up and everything else, like inventories went crazy. You don't have that today. Okay, you do not have that today. But the money that funded all the subprime is now funding the non-QM. But that's non-owner occupied at 70% loan to value, not at 100 to 103% like it was in 08. For owner occupied is a totally different thing. But that's the same money supplying the non-QM that supplied the subprime back in 06 and 07 and before. If you want to know a crash course history on that stuff. But anyway.
They're just not going to raise rates. They'll crash the stock market. Not crash it, but it'll react.
Yeah.
And they just don't want to do that right now.
Yeah.
Do you see anything changing whether or not there's a change in office of presidency?
Mm-hmm.
How do you think it affects us if someone other than Trump becomes president?
The first one was an easy question. The second one's not so easy. I don't know is the answer for me personally. I can't turn this into a political conversation. I'm co-owner of Jet Lending, and we rely on a lot of real estate investors. I don't want to offend anybody, so I refuse to turn it into a political conversation. Kind of like Michael Jordan, when they asked Michael Jordan at his prime to do
I remember
political advertisements,
and he didn't want to do it
for a senator representative in North Carolina, and he wouldn't do it. And that particular senator representative was a Democrat. He said, "Well, Republicans choose too." So he refused to do it at Jet Lending. I just have to put my.
But where do you think? In your mind, where does the market react for housing? Do you think people today are running scared because they're thinking their job may get lost?
The statistics don't show that.
Okay.
But I'll say this. My Republican friends will not like this one, but I'll say this. When Obama was in office, we did just fine.
So there is no reason to not buy today, then, is what you would say.
Yeah, I agree with Eddie. There's, stock market's the first thing that reacts because they react in one day, right?
Yeah. It's
So
very, very hyperactive.
Let me pause you. What does the stock market not like?
Uncertainty.
You got it. Took the words right out of my mouth.
So if Trump wins,
That's right.
the stock market's going to run.
That's right.
If Biden wins, the stock market's going to dip and then run because Biden, not
because
Biden.
Then there'll be 4 years of certainty.
Well, and Democrats are good for business.
Uncertainty.
Right.
They're good for business. They are.
Yeah.
They say that. Well, I'm not going to get into that, but it'll be fine either way. But certain things are going to happen as a reaction short term, but in the long term, I think who the president is means a lot less than
Well,
most people.
The
put-
Republicans
put-
are going to control the Senate and they're going to control the Supreme Court. Okay.
Okay.
So it's going to be split up there.
It-
Nobody's going to get anything done efficiently.
Gotcha.
They'll get things done. They're going to get it done efficiently. Do we have questions? David Kane, tell us about long-term loan. Boy, that is a broad question right there.
It's time to get.
And
time
you
to get
heard me
one.
say it's
For rentals. There we go. Thank you,
Okay.
David.
I was gonna
David's
say,
quick.
Owner occupants or for rentals? Well, we have to take for rentals, and again, I'll split it into two categories. You're gonna prove all your income, show all your income, or you're not gonna show any income. Okay, I mean that's the split. Show all your income. Okay, then you go to Fannie Mae or you go to banks, and you get great rates, but it's a cumbersome underwrite. It's hassle.
But it's short term
pounded.
paying for a huge
Yeah.
gain in the long term.
But you're in that stack to show your income and
Mhm.
you got great credit, then you go that route.
You either can or you can't.
You can or you can't. You don't show income. You write all your income off. You make a bunch of money, got a bunch of money in the bank, got a 700 credit score, but you show no income or limited. Then you go the non-QM route, which is through jet lending. And we're about a 6.5% rate, 30-year fixed,
Which is not bad.
which is not bad for not showing your income. And there you go. If you don't like that 6.5, then pay taxes and show all your income and go to Fannie Mae and go to 36 regional banks in Houston and do that deal and get yourself a better deal. And that is what you got to do. Okay. For more than 10 rentals, well, you're not going Fannie Mae. I can tell you that flat out. So you take that one out of the picture over here in this show your income box. But small banks, they don't care. They'd rather you have more than 10.
Mhm.
Spread their debt across
Spread the risk out.
Spread the risk out. Non-QM, not a factor. I'm shaking my head. No, I don't mean no, you can't do it. No, it's a non-factor. Do as many as you want to do. Is that correct, Alex?
Yeah, and your rates
That
at
is correct.
a local
Do as many
bank
as you want.
are probably going to be in the 5s. Some will get you down in
Yeah.
the high 4s if they
Yeah,
love you.
yeah,
If you're a
that's
good
right.
customer,
That's
they're
right.
going to be in the 5s somewhere. They're going to be much more difficult to deal with than a jet.
But that's a great point.
And there are other options if you're willing to go even different type of money routes for 10-year loans. If you have to do them, very low doc, but it ain't 6.5%.
But Rich, that's a really great point. I mean, 6.5 and you just you blow through them.
Like a
I mean,
jet.
you freaking close like a jet. Thank you.
Good
You
Lord.
blow through them. That was great. How much is going to?
Eddie Gant, ladies and gentlemen.
I'm gonna say
He'll be here all week.
the lowest you're going to get at a community bank right now, which is going to adjust every 5 years, by the way. Low 5s. You might get a little if you put a bunch of deposits in the bank. So
Yeah, and if you pay,
Fannie Mae, you'll kill that rate, but it's harsh.
you
It's
pay
harsh.
you pay an eighth more or a quarter more, and you can get a 10-year fix. So if you want a longer fixed rate, you're going
Yeah.
to pay a little higher.
But
Yours
this
is 30-year fixed the whole term.
non-QM
full
yeah.
term?
Oh yeah, and we do all the non-QM. We're not
Yeah.
Fannie Mae's and
And if your
Stuff,
plan
yeah.
is to hold it for 30 years, you can't hardly argue with
Yeah.
that because it's fixed and you don't have any upside risk.
10 years ago, 20 years ago, we'd love the 6.5
Oh, yeah.
rate fixed on a 30-year mortgage for a rental. You'd love that. So the line would be to the freeway to get it.
Mm-hmm.
It really would out the door.
My Chase mortgages were 6.35 to 6.75.
Yeah.
Yeah, I'm paying
Yeah.
2 and change now
Yeah.
on my personal
Yeah.
house.
And that 30-year
It's the
makes
same.
a big difference,
But I'm not going to refi mine because I was already like 12 years into it when this started.
Well, I got lucky.
you know?
I was on an arm and I was stressing out thinking I was going to have to refi. And now
Oh.
I'm like, wait a
Yeah,
minute.
yeah.
Got lucky.
All right. So, how much money do you think that you need if you're looking at this and you're not seasoned? How much money do you need to get started?
Well, get started in what?
Right.
Get started in. Let's go the easy way. Get started wholesaling.
You don't need zero.
Okay. Let's say get started flipping, and they want to do a loan with jets.
Depends on if you buy it right.
Yeah.
If you buy it right,
Yeah.
you can rehab a house.
Let's say
for-
you buy it
You know,
perfect and you
six-
come to closing with zero out of pocket. How much do
Six-
you need?
You need 6, 8 months of payments,
Okay.
maybe plus a little, a third of the repairs.
Yeah, you don't want
The flow. You get stressed, and a big factor is, do you have monthly income? Are you working for Exxon? Do you work for somebody? Do you have income?
because some people don't think about it as, oh well, I got 100% of the repairs funded. Those contractors want to get paid when they do their work,
Hey,
right?
wow.
We all
First time I've ever sneezed, I turned my head, closed my mouth,
goodness, turn your head and cough. So you and I,
or sneeze.
all three of us have dealt with contractors for years, right? And when they get their week's worth of work done, they want to get paid on Friday.
Mhm.
And if you make them mad, you might not get them to show up
Yeah.
at all.
Here's
So
a real estate
you-
tip for you. Never pay your contractors on Friday. You want to know why?
Because they won't show up on Monday
And why is that?
because they're still hungover.
Yes.
Well, hell, if you
So
pay them on
when do you
Thursday,
pay
they
them?
don't show up on Friday.
No, you pay them on Monday
Anyway,
because they show up and they've already worked on Monday and they're not going to get drunk on Tuesday.
my
I
point,
tend to agree with that, but most contractors are going.
they'll have a fit.
Well, they're
But
going.
think about this. My
Scream.
point is, you got to pay them reasonably quickly. And a lot of times when you have to do a repair draw, wait for the repair draw and then get the funding, it's a delay. And you want to be able to front them a couple of bucks, then do your repair draw.
Well, I have a better lesson than that.
Okay.
And that is pay on progress, not on time.
Ooh, that's a good one. Eddie used to teach a great class about rehabbing property.
Managing contractors is the hardest thing in the business.
Yep.
I don't care what anybody says. I'll argue that point.
My favorite
Absolutely.
Eddie Gant teachings was at Egg and I when Eddie used to talk about seller financing.
Yeah.
That blew my mind.
And seller financing will rise again. Not that it's dead now. And I don't want to piss off my friends out there that's in the seller finance business, but seller finance business is not a needed
Mm-hmm.
exit strategy right now because everything else is so hot.
It's
You
selling
use
too
seller
fast.
financing exit strategy at its best is when the market sucks.
Or
And then
when
you make a ton of money.
non-QM is no longer available, seller financing becomes a very great wealth building
Well,
strategy.
Well, I'm gonna reword it a little bit.
Okay,
I'm gonna
reword it.
Reword a little bit.
You typically
Come
do
on.
on anything that I post
Yeah.
out there,
Well,
including
no, I'm not picking- it's
including
just different
paying the
opinion.
contractors on
It's
Monday.
just
But
different opinion.
Okay.
It's just different opinion.
it's okay.
I'm
My
gonna
butt
come
was
back to
just
that
hurt just a
question
little
right
bit.
there. Let's come back to that one.
Yeah.
Seller financing is at its best when it's tough to sell houses and for whatever reason. It has nothing to do with acquisition, in my opinion. It's when you're having trouble selling. And let's think about that. Is it trouble selling houses right now? Hey, we've been talking about these damn statistics. Hell no. So it's not that there's not a market for owner financing or seller financing. It's not at its peak.
Correct.
peak.
Correct. But
Okay.
and mainly the
okay.
reason why that is
All right.
because there's
So-
products out there for TIN or
That's right.
whatever those
That's right.
people are.
That's right. It's all of those reasons.
Yes.
So when did it peak? In my career, it peaked in 08 to 11. That's when it peaked.
Yeah.
And that's when we
Well,
financed
the mortgage
whole thing.
market was so
Yeah,
tight.
Yeah, and there was so many houses
Bro.
on the market. Somebody calling me trying to buy a house.
I mean,
right?
between all the calls and
Man.
text messages, this is incredible.
Well, if he didn't have his sunglasses on,
All right.
none of them would be calling.
So anyway, that's when it peaks. Seller financing is never dead. It's never dead. But it it's like anything else, it peaks. I'm gonna tell you something. If you want to make some money,
Okay. Let's listen.
you go into the owner finance business when there's, instead of 18,000 houses on the market in Houston, there's 60,000 houses on the market in Houston, like it was in 2010.
So when does the market turn and become flooded again with listings? When do you see that?
Boy, I tell you,
Both
what,
of y'all.
that is. I don't know when.
If we knew that,
What do you think your
Hold on,
indicator
hold
would?
on, hold on.
Ah.
Hold on. I don't know when it's going to happen, but I'll
Okay.
tell you this. I mean, you can call me arrogant, call me cocky, whatever, but I'll tell you this. When it happens, I'll be one of the first 5 or 6 or 7 people to notice it.
well, somebody's gonna blow an oil well up.
Mhm.
Somebody's gonna start a war. something like that is going to be a big.
Yeah. I watch it daily, and that's no bullshit. I watch it daily, and when it does this, I'll be one of the first single-digit people to see it. I watch it that close. That's true. I don't know when it's going to happen. Could happen tomorrow. It might happen sometime in 2021 or 2022. But when it happens, I'm going to know, and I'm going to know quicker. And here's the key. When you see it happen, you change your strategy quickly with conviction. And that's a key word right there, with conviction. It's going, I got to go.
What does that look like for an investor? Seasoned investor, what does that look like?
Well, you see the actors come up.
What is the change in conviction I'm talking about? When you said change your strategy with conviction.
You
Okay.
buy lower, and everything in your inventory, you either dump for a lower price or you rent it.
Quick.
Or you own or finance it. Quick, get rid of all existing inventory.
When
And all new inventory, you might have bought it at here. Might have bought it here.
you're offering here now.
Now you're here.
Okay. All right. So I've given
And
you
do it with conviction.
I've given you a couple. Let me give one for Rich. Okay.
Mhm.
Richie Rich. Here you go. If Biden wins election, there was a question that was posted on Facebook. I thought it was great. They said, if Biden wins election, one of the things that they're funding in the stimulus package is that there would be 1 year of a moratorium on evictions. How, as a landlord and a person who owns a company that services renters, how would you deal with that?
Well, that's a little of a misnomer because first of all,
Okay, this is
they'd
good.
have to also win the Senate.
Okay.
Because if they win the
That's right.
election,
This
they
was
have
in
the
the
White
House.
House.
Yeah.
So the House has already proposed that
Mm-hmm.
because it's controlled by the Democrats, and the Republicans said, "Oh no, we don't want to do that." And in my opinion, I use a quote from Mark Dotzer: "The value of a contract has never been lower," because you have the government telling us what we can do and what we can't do with a valid contract, and we can't enforce it. Which
Right.
is, to me, it's not legal, but there's no argument. You just got to do your business, right? The best you can. So for now, for instance, there's a CDC moratorium on evictions. If someone swears that we would likely be homeless and they've been affected by COVID, can't evict them.
Okay.
So we're reacting to that, and we've come up with some strategies to offset that.
What's a strategy that y'all have come up with?
So instead of filing an eviction and hoping that the tenant doesn't know about the moratorium, we're going to them ahead of time and saying, look, you're going to have to swear to this. And if you lie, it's perjury, because it is.
Mm-hmm.
And if you have, your application right here shows that your brother lives 3 doors down. If you can stay with your brother, you're not going to likely be homeless, and you have to swear that you'll likely be homeless.
Can I repeat something for everybody that's watching in case that they have rental properties?
Mm-hmm.
I've asked Rich this almost every podcast. If let's say I come up to the 5th of the next November, I've never had you manage my property.
Okay.
Can I call Renters Warehouse and say, hey, will you guys manage my property?
If you have a tenant, you have a tenant in it.
Yeah.
Yeah, we do it all the time.
Okay. So it doesn't matter what stage. I could be needing to go to eviction, and I can sign a contract with you, and you guys take
We'll
over.
take over from there.
Okay. I think
All right.
that's a great
Yeah.
piece of information
Yeah.
for you.
So let's get to the question, right?
Uh-huh.
They would, if they won the Senate and they controlled the Senate, the House, and the White House.
So
they would
worst
pass
case
something like
scenario.
that. They would probably pass something like that, right?
These are my opinions. They do not reflect these guys.
Right now, it's almost impossible to evict as it is right now, and our collections are within 2% of pre-COVID rates. So for the most part, tenants.
Do y'all knock on doors?
No, we never go to the house. We
I'm not
never
as big as
bang on
you,
their
'cause I
door.
only have my own. We knock on doors.
We don't.
And
What does that mean? Like, when would you be knocking
You
on
go,
doors?
where's my money? That's what he
And-
means.
I know, but at
and-
what point?
as soon as they're late,
Okay.
more than 10 days, and it's peer pressure.
Yeah.
They
Right. They see
they,
someone
they
there.
pay us and not to escalate. Okay, that's the way I like to say it. You know?
There's another program that just released that everybody needs to know about, and I can't remember the dang name, but it's a state program, and what it is, it's an eviction avoidance type of eviction diversion. That's what they call it. So here's what they have: funds available. There's a few requirements. They have to be at least a month behind. They must have been filed on for eviction, and if they don't make more than double the poverty level, based on that, and then the house is not rented for more than 150% of fair market value, they'll pay up to 120% of fair market value rent for 6 months, going back and forward for a total of 6 months. Harris, Montgomery, and Chambers County are in the pilot program, so Galveston, Fort Bend are not. But if you go to the Texas Eviction Diversion Program, you can get the details. So we're also presenting it to them. And here's the important part of it. If we file an eviction on someone and they pull the CDC letter out, we have to dismiss it. But what does that do to their record? They have an eviction that was filed and dismissed, which is a huge negative, right? You were such a pain in my ass that you got filed eviction on. With the diversion program, it's suppressed from public record. That they didn't even
That's
get
a
it.
pretty good question.
Yeah, that's a great
Especially
question.
Second half. Especially the second half.
Roger
Second
is
half.
asking, isn't the moratorium on evictions for non-payment of rent? First question. Second question, what if the owner has decided to put the house on the market? I'm assuming put the house on the market with the tenant still living inside.
Go ahead.
If the lease is at its termination, you can absolutely non-renew the tenant.
Mhm.
But you still can't evict.
Of course you can, because it's not for non-payment. It's
Gotcha.
for violating the lease is over.
For not
The lease
moving
is
out.
over. You're not accepting payment. The lease is
That's a
over,
good
and I
question.
choose not to renew the lease.
What was that gentleman's name? Paul? Was it Paul?
No, Roger Roseberg.
Good. Roger.
Now,
That's a
Roger,
good question.
Talk to your
You know
attorney.
Roger?
Talk
You
to
know Roger?
I don't, but talk to your
Oh.
attorney, because if you evict somebody and you get a big fine from the CDC, I don't want to hear from you.
Well, most of the
We have another.
JP courts are
There's-
playing the game with the CDC and everybody else.
Yeah, and
So,
here's the problem. And the reason we went to this model is because when they serve the papers for the eviction, they're handing them the CDC form.
Mhm.
And they're handing them the other form.
Yeah.
So it's better to get in front of it than to wait for them
Yeah.
to give it to them. And then now
Yeah.
you're down a
Well,
road.
The good news is for us, I think you're similar. We were running 96% of rents collected.
Mhm.
And we dropped and we did that for quite a while. Then we dropped to 89. But the 80 drop from 96 to 89 was because of only a very few larger houses. And we're knocking on doors and we're working with them, and we've been successful at knocking on doors and saying, well, your rent's $1,200. Can you give me $800?
Mhm.
And it's that little bit of a peer pressure of knocking on the door and showing up that's increased us back to that 92, 93, 94%.
Yeah. Well, with your scale, though, with the number of
And we
rentals you
got-
have,
we
a
got-
few houses.
I got 100-ish.
Right. So a few houses makes a big difference
Yeah,
if they're
that's
if they're a
right.
lot
You
they're a
got-
lot of
you got
percentage money.
1,000.
We got 1,000.
Yeah.
So David asked a good question. How about doing month to month to avoid squatting?
Well, first of all, for David, tell him his next question costs him $50. He's up to 3 now. So what was the question? Well,
How
I'm
about
trying to-
going month to month?
How about going month to month to avoid squatters?
Okay, David, you need to
Okay.
clarify, what do you mean avoid squatters?
I
I
think
mean,
he's,
versus having a vacant house?
Yeah.
I don't think he's meaning having a
Yeah.
vacant house. He's saying that let's say that
David's-
they're
Yeah.
out of contract, they haven't left,
Yeah.
then go month to month.
Well, now David's a friend of mine. I know him very well. I'm going to have to clarify that because I'm like you. I could take that question 2 or 3 ways. Well, let me tell you what I do. Even in a good market, it's a good rule to live by, and that is you avoid vacancy. Period. Vacancy is your cancer for rental properties. Now I know David, and he sells a lot more than he rents, I think. So maybe he's talking about he's got somebody in there, and he wants to they're going to leave, but should I rent to month rather than have it open?
He
The answer to that would be
clarified.
yes.
He just clarified. What he's saying is, what about if we rent today, starting renting today, and we only do short-term rental agreements? Like every, that I guess they renew
Well-
upon the landlord's option. Would you do that?
I avoid vacancy at all costs.
Okay.
That's a golden rule.
Okay.
I'll tell you that. Now, if I plan to market the house for sale,
Go month to month.
well, honestly, if I really want to sell it, the answer is no. Because I won't sell the damn thing. And you'll sell it better and quicker and easier for a higher number than putting a month-to-month renter in there, in my opinion. If your true goal is to sell it.
If your goal is to sell it, you'll likely make more money selling it for less with a tenant in it than getting the tenant out, getting it ready, and retailing it.
Yeah.
Almost every time.
Your true goal is to sell it.
Now, David, I can answer that question very simply. If someone has lost their job, it's already happened.
Mhm.
Okay. So if you're putting in a new tenant, they have a job, because unemployment's not a job in our book, right? It's not, you could call it income, but it doesn't count.
Yeah.
So if I'm renting to somebody today and they have a good history and they've been paying through this whole thing, I want them on a lease.
Right.
Yeah.
So the only reason I wouldn't is because,
Yeah.
the person you rent to now is qualified.
Well, so I'm clear, and I think you agree with me on this. If you truly want to sell it, it's going to sell better without a tenant, in my opinion. For if you're trying to maximize, you agree with me?
Yes, if it's vacant today, but if you have a tenant in it and they've been there 2 years, you don't want to move the tenant out, do the rehab, sell to a family, and they don't like the backsplash you just put in. The carpet's the wrong color. The walls aren't this. If you sell it to a landlord for $10,000, $20,000 less, you net more, because the landlord goes, "Are they paying? All right, where do I sign?"
Mhm.
The friction that you deal with moving a tenant out that's been there and rehab, make ready, and then a retail buyer versus you and I buying a house. If I buy an occupied rental, I might walk through it for about 5 minutes.
Yeah, I don't pay much attention to the repairs.
Oh, they're paying
Roof, plumbing,
appliances, plumbing,
AC.
AC, right?
you know.
And I don't care that the wall in the bedroom is purple. I don't
Yeah,
care,
yeah,
but
you don't
a homeowner does.
That's right.
Now you got to repaint it.
I agree completely.
That friction loss is huge.
Yeah.
You're almost always going to make
Right.
more money leaving a long term. Now, you're right. If the house is already vacant, you don't necessarily put a tenant in and then sell it.
Yeah.
We're getting a lot of
Before we go to
compliments.
Louise here, but before we go to Louise, I got to ask you something, Rich, because you keep close on this, and I have a motive for my question, which I'll tell you
No.
after I ask.
No, you don't.
I have an agenda here. Have you seen? And by the way, my technician over here to my right, we're empty over here. I
Yeah,
need
our
another
waters
I need another
are
water.
empty.
All right, my question is, have you seen an increase or decrease or the same of these big boys? And I don't mean a big boy meaning buying us 3 or 4 a month. Have you seen any type of increase or decrease of them big boys moving in from hedge funds, buying up volume, buying up bulk for rentals?
Yeah, they're still buying.
Increase, decrease, or stay the same?
So Blackstone, for instance, I haven't seen
That's a
them
big
buy a
boy.
lot, but now they're moving into some other stuff.
Mhm.
What are they moving into?
Oh, well, golly, I just read the damn story.
Yeah.
Are they here in Houston still? 'Cause
Well,
I saw a lot of them.
Blackstone-
I saw a lot of them move out.
Yeah.
Blackstone never bought in Houston. They only own in Houston because they bought companies that already owned in Houston. They never actively bought in Houston. They bought like a Waypoint.
Yeah.
But the big players, we have a new hedge fund coming in right now. We're trying to work a deal out with.
Yeah.
I just made a deal with some guys in the Woodlands. They're builders,
I got a call 2 days ago.
and they're buying that, and they're keeping some of their new constructions for rentals
I got a call 2 days ago.
from a hedge fund.
Mhm.
Yeah, I got a call yesterday.
A representative of the hedge fund, allegedly. And of course, you have to smoke them guys out a little bit.
Yeah.
He may or may not be direct. He might just,
It
You're trying to broker a deal.
making a,
Yeah.
making,
Yeah, that's right. But anyway,
that was,
it was my first call for that in a while.
Yeah.
I just wondered if you've seen an increase in that.
I don't know if I'd call it an increase, but it's still happening.
Okay.
It's not what it was when they were ramping up.
Okay.
It's certainly
I
not.
want to come back to Lewis's question because he had a good one. What have you got for us? You got something else you want to lay on us here? And
Go back to Lewis's question.
I don't know if I understand it, but it was lengthy, and I thought it got my attention.
Well, what Lewis was asking is, would you make a lump sum payment, which you already answered the question, which is why I really did not.
Okay. All right.
Lewis is asking
Put
if
it
we
back
would
up there,
if we
Alex,
would do a lump sum payment to in lieu of the full payment to end the contract.
For a tenant.
Yeah, like let's say
Me
that
as the landlord, cash for keys.
right.
Is that what we're saying?
Yes. Or like, hey, I know you owe 1,200, but I'll take 800. You already said that. Or yes.
Will I take a discount for rent? Well, first of all, if I take a discount for rent, I'm not just ignoring the other. I'm taking a discount to stay in the house and me not evict and us continue our relationship. But the balance due is still there. Maybe I get it later. Maybe I don't. You never know. But I don't think that was the question. I was interpreting.
Put it back up
more
there
of a-
so we can
more of
read
a-
it a little better.
to end the
do I do a
contract.
cash for keys?
Yes, to
And
end the
we
contract.
do. We do. We don't use it probably as much as we should or as much as others, but we will use it. And, let's just get on about our life and you get some money for the keys and be gone and
So-
we get the house back. But
So he's
You know.
saying take some money from the tenant and let them out of the contract and don't file on them. And,
We'll do it.
and to save yourself from them maybe filing the
do it.
CDC
we'll do
deal.
it. We'll do it.
And and
Yeah.
it's all about
Motivation to get them out and how bad's the
Yep.
damage.
what's the house look like? How have they been in the past? Have they,
Yeah. Yeah, we'll do
there's
it.
a big difference between a great tenant who really truly lost their job and really truly is in a bind and the ones running the game.
That's right.
And it's about
That's right.
2 seconds to figure out which is
Oh, it
which.
sure is.
It takes about 2 seconds.
Well, here's a good indicator of that. I've told this for years. Here's a way to tell if they're struggling or not. Go over and knock on the door at 2:00, 4:00. If they're home, they're not working. They don't have a job.
But today, that doesn't mean they're a bad
Yeah, that
person.
is-
Oh, that's
Today-
right. That's right. That is my point.
Or they work
That's
the
my
night
point.
shift.
That's my point.
Or today they're
you
just
show
working
up-
out of home.
You show up in the afternoon, well, but you gotta. If he's
Today they could be working at
If
home.
he's a blue collar labor worker, he's not home.
Well,
But
not
you're not
everyone
speaking
that I
for every
have.
landlord either.
Yeah,
I
not
know,
every
I
person that I
know.
have. I was more of the
You
middle
gotta
collar.
read it. You gotta read it.
Yep.
You gotta read it.
Yep.
If you show up,
You show up to an $800 house and they're sitting on their couch playing Xbox, you got a problem.
you show. My point was, you show up at 2 and 4 o'clock, and they're not there, and you can't gauge by one day. You do it at series. They're probably working. And they
Probably.
probably have money to pay rent. That's my point. You show up and they're always there, they're not working. And then you gotta plan your actions from there. That's my point.
Have
That
you
makes sense? Does that make sense?
have you seen a increase in short sales?
No.
I haven't.
Have you seen an increase in foreclosures?
Well, the absolute answer on that's no. And you can't foreclose in Harris County since the February sale anyway. Fort Bend you can, in Montgomery County you can.
Have you seen it there?
No.
Okay.
No.
Have you seen an
Hold on. I'm gonna go back. You know how many foreclosures we got this year? Jet lending?
0.
It's more than 0.
5?
That is the number. 5 all year. 5. That ain't a lot for
For your industry.
our
Of course not.
portfolio. That's small. Less than 1%.
I was gonna say you got at least 10 loans out.
Yeah, at least 10. Yeah, 5. We're at 5, 9 last year. So anyway, point being, no. No, that is a non-factor.
No, I'm talking about when you're going to go procure property. Have you seen a increase in foreclosures available for purchase as an investor?
No,
Okay.
I have not.
Yeah, I just think back to
Yeah.
that same topic. There's no value in a
Yeah.
contract right now. The
Yeah.
government's controlling
Yeah.
that and forcing people to
Yeah.
deal with a delinquent
Yeah.
borrower that
Yeah.
doesn't deserve it.
Yeah.
So there's no sense of urgency for anyone who has a delinquent note to even get out of their house now.
Yeah.
Nope.
Well, let me get on my soapbox for a minute on data with that. Tell you how it's such bullshit out there. I promise you, it wouldn't take me very long to do this. I could take you to my emails, and I wouldn't have to go back very many days. And I could show you an article that comes across at 10 o'clock in the morning. It says foreclosures at an all-time record. What do they call them when it's not a foreclosure yet, but they're in
Pre-foreclosure.
Yeah, all that crap. And I promise you, the same day at 2 o'clock, I could show you another article by the same organization, Inman or National Mortgage News, saying the direct opposite. It's all bullshit trying to get readers.
All they need is clicks so they can get paid their ad money.
And I'm not telling you it's going to go either way, but I'm just telling you that there's so much misinformation out there trying to get readers and clicks.
Well, you also notice that lenders are holding the bag. Lenders and homeowners are holding the bag. So, for instance, the diversion program in Texas. You ready for this? You have to file on them because if they're not filed on, it's not an urgent enough situation. But if you agree to be a part of the program and get the rent, you have to forgive the filing fees, any other admin fees, and no late fees.
That's a good question right there, Mike. Are we expecting a landslide of foreclosures when they're allowed in Harris County? Well, the short answer is yes. But you have to look at the next foreclosure sale whenever it is. It might be November, most likely not. Nina Hidalgo killed it from March through October. Now, I'm not doing it again. I'm
Lena.
trying not. Lena, is it Lena or Nina?
Lena.
Mrs. Hidalgo. Get that right?
Well, you don't have to
on.
be a Republican or Democrat to say that a lot of the things she's doing is not good for the population.
Yeah. All right. Did she come out and say you couldn't have a foreclosure sale? The answer is no. What she said was you couldn't have a public gathering or a gathering of X number of size, blah, blah, blah on public property. So she shut the venue down.
Mm-hmm.
She never said you couldn't foreclose. So everybody knows. All right. But the effect is you couldn't foreclose. So the answer to her question, and I explained landslide, I think the answer is yes.
Yeah.
Because it don't matter what your rate of foreclosures is, ever how low it is, you have March, April, May, June, July, August, September, October, plus November. It's going to all pile in on November.
Yeah, I'm
going to go down there because it's got to be the best damn networking venue ever. It's going to be like 1 million people down there. And I'm going to go down and hand out business cards. Hey, I'm Eddie with Jet Lending. Hey, I'm Eddie with Jet Lending. How y'all doing?
We're actually going to call it
6.5%.
I'm going to park the night before and get a room at the Days Inn around the corner, so I'm going to be sure I'm there.
Man, he's
buy an RV. I'm going to buy an RV and park it down there.
Just make Alex go. He'll go down there.
I mean, we'll all be down. We'll be at Banners,
Dr. B will go down there.
Jet Lending, But the answer to the question is, how could it not be? How could it not be?
Good question, though.
It is a
but
great question.
It will.
Yeah.
So. Even if it's the best market and everybody's paying, it's going to be a deluge because it's like you said, there's not been one for months.
Yeah. Well, it's at 7, but let's go for a few. Let's go a little longer. I'm good. I'm good. I ain't got anywhere to go.
All right. Stevie Wonder says, let's keep going. So
now we only had 2 guesses or 3 guesses for your glasses. You want to do that?
Nobody's going to get it, but let's see who got it. If they got it.
Whoever said
It's got-
Exxon gas station glasses,
Should probably
you're
win.
very close.
What are the guesses? I mean, what do we say?
Eddie, I see Eddie
hold on,
Bauer.
Hold on. I'll do better than this. Hold on. If anybody gets it, the first one to get it, not everybody, the first one to get it, and I'll continue. Ain't nobody gonna get it.
Yeah.
And these are high end. I give them $50.
You already
Eddie Bauer is
you already said
incorrect.
half of an appraisal.
I know, plus
$50.
Plus $50.
A whole 50?
A whole $50.
Oh damn, Eddie, you're splurging today.
$50. Just for dinner.
All I gotta do is ask
Why
you. You'll
don't
buy
you
me a
just-
$50
You
steak.
got Eddie Bauer. That's incorrect.
Spy
Sunglasses
glasses.
is incorrect.
Yeah, those aren't.
It is a well-known name.
Tag Hoyer.
Foster Grant.
Foster Grant. Who? Somebody say what was the other one?
I said Tag Hoyer.
Okay.
I thought that was a.
I said
thought that
Tag
was a
Hoyer.
watch.
That's what I said.
But you're not. You're not. Maui Jim's is incorrect.
Maui
But
Jim's is
you're not
incorrect.
eligible. You're not eligible.
Kevin.
Strike King, no. Sunglasses on your Dodger tie.
No, they're not Fay-Bands either.
Well, they don't have a logo on them, so that's
Well,
sketchy.
I will tell you that his glasses and my glasses are made out of the
No,
same
no.
material.
I bought them in Vegas at the Paris.
Nope, it's not
casino.
Folkley's.
Oakley,
It's not
Oakley.
Coast.
They
It's
look like
definitely
Oakley's, but
not
they're
Coast.
They're not Oakley. They're not Oakley.
Okay, I'm gonna give y'all a hint. If you go back and watch episode number 12 of the pandemic,
Oh, David Kane, the winner.
Is it?
You're not eligible.
He said tag already.
I know, but he's sitting here. There are Tag Warriors.
All right, Dave.
I thought that was watch.
it is a watch.
Tag Warriors.
It is a watch.
David Kane wins. I guess I got to pay you too. You told him. You
Nah.
texted him. You split the
I did
50.
not. I did not. No,
All
I'm
right.
not. I'm not.
David
splitting.
Kane gets $50
And half off an appraisal.
and half off on
And
a
for
prize.
everyone that was listening in to the podcast tonight, you might have
I don't
heard
think he
Eddie's.
spelled Hoyer right though.
Yeah, he didn't.
Disqualified.
The first person to spell Tag Hoyer correctly. Did he get it right? I don't know if he did. That's where I go. Yep, Tag Hoyers.
Yep. Yep.
Yeah.
So if you,
All right, let's lay something else out there. Let's go for another minute or two, and then
Okay.
we'll shut her
Yeah, you
down.
still got to get John's question.
Does Eddie still? Oh, that's a good one about rehabbing houses. Let me tell you,
Who wants to listen to you talk?
I have not done an event where we just put it on ourselves for a while. I have to admit, I got a little bit of an itch to do it.
like Jock Itch,
I don't know how we want to do it. What'd you say?
like Jock Itch, and then you said, "I don't know."
Yeah. You know, I have a little bit of a urge to do it, you know. So
I will tell you, I've been to 6. I paid for 6
you know,
Eddie Gant classes,
we
and
used to
each
do
one
it.
of them were very highly entertaining and extremely educational.
Well, there's a certain level of bullshit, and there's a
Yeah.
whole lot of good info.
Yeah. We may do one.
But that's the beauty
We
of
may
it.
do one.
You may have to bring me in to draw in the audience.
Yeah. I mean, here's a few things we do. Oh, let me tell you how we used to do it. We used to do a 2-day event, and we'd do a Friday, Saturday, or Saturday, Sunday, and we'd charge $300, $200. You know, it would. Time y'all done everything, you didn't make much, but you had fun and got customers and had lunch for everybody.
You helped a
One
whole
time-
bunch of folks.
One time we even did it, and we had a big cookout at the end of it.
Mhm.
Went to my house, and we had a big cookout. You know, so
It's a 2-bedroom.
it's something I might want to do again. Alex, it's been a while. Have you ever? How long you been with Jet?
6 years.
6 years. We've never done a 2-day event while you were here, have we? So it's been longer than 6 years since we did one. And, you know, there's a few buzzwords out there that if I just include a 2-hour session on subject 2,
Mm.
which is not a good session, to be honest with you, 2 hours. subject to,
It's a
We used
half
to
a
teach
day
it.
at least.
well, we used to do an 8-hour subject
Yeah.
to. We spend half a day on the insurance,
Mm.
getting it right.
Mhm.
So I don't know. Would you ever want to team up and we do one? Would you ever want to
Oh,
team up?
I will
and we
team
do
up with you,
one? And-
especially if I could do the
but if we're going to do
the
it, we're
rehab
gonna-
or
we're
new
gonna do it.
construction.
We're going to do it. If I do it, we'll do a 2-day event, and
I love it when you give me
we'll
those eyes.
figure
Andy.
out. We'll figure out if we want
You
to
give me
do
the
it.
agua eyes.
We figure out if we want to do it.
Bring
I-
them to hey,
I-
Taylor. I will agree with you. We need to go to Dallas and do an event.
You know,
We need to do a big event in Dallas,
I can be talked into it.
and
Alex,
we need to do it
you
at
know,
the Gaylord,
I
Texas.
don't want to do it where it's just me. You know.
Well, hold on. I got something
know,
to say.
I mean,
This-
I know. I don't
this is
want to do it
important.
just me. You know.
This is important. I've known Eddie for 20 years. He
Lies.
can be talked into pretty much anything.
Yeah.
Eddie, will you take your
Unfortunately
shirt off
for Eddie.
tonight?
Oh, yeah.
Oh,
Already
no.
did it.
We don't want to talk. We want to talk him
Well,
out of that.
We might do it, but you know, I don't.
Okay, well,
yeah,
do
but-
us a favor then, since
Yeah.
you're watching this. If you guys would like it, just hashtag
I'm gonna tell you.
hashtag event.
If we do it, it's going to be a 2-day event, not a 1-day. We're going to do it where it's nice, and we're going to do a big social event either Friday or Saturday night during it. That's the only way I'll do it. I want to. I don't want to just teach. I want to know people. I want to
Oh,
talk
I
to
enjoy
you.
that.
And I don't
That's
mean
the
that
best
as
part.
bullshit.
Remember how we used
I want
to-
to have drinks with you.
Remember
you know?
how
I
we
want-
sit out on the patio at the RCC and listen to country music
yeah,
and visit?
yeah.
Man, that was fun.
So if I do it, that's the only way I'm going to do it, and I'll probably do it. You know, it's been Alex. You said 6 years, and the reason I asked you that is I knew you weren't here when we used to do the 2-day events.
There you go. We got our first hashtag event. Let's go.
Yeah,
Oh, tell
yeah.
John to go ahead and send his
Yeah.
money in. It's going to be 800 for you,
Yeah.
John.
No, I'm not. I don't want to do it. I don't want to.
John
do it.
outkicked
I
his
wanna-
coverage. He at
I
least gets a
wanna cover
50%
costs.
discount.
I want to cover costs and maybe have just a few bucks left over.
To at least pay for my room,
I'm not going
And
to.
the
I'm
bar
not
tab.
going to turn it into a.
No.
my water bill.
I will make our money. You borrowing money from us. Honestly, you know. You
Yeah.
Come use us and use our money. Use his services to manage properties. We'll do it for that, as long as we can cover our costs.
It doesn't have to be. Texas doesn't.
I bet we can fill it up.
Oh, well, I say that we
Because I
do it.
think-
I say that we do it a joint. We do the people who want to show up, and then we offer an online.
No, I'm talking about Brenner's Warehouse.
Yeah.
But yeah, no.
So-
totally.
I hope this was good. We bounced around a little bit tonight, but I'm gonna tell you this.
I felt like this was the
this
least bouncing we
yeah,
did. We spent
maybe.
30 minutes talking about rental stuff, which I don't think we ever get to do for Rich. We got to talk about 30 minutes on that. The one thing that I did want to talk to you guys about, and Eddie's right, I came up with this idea for this because there are questions that I have monthly that I want to know his information on, and I at least get him for an hour of him telling me, just wait a minute, every time I try to ask another question. And but at least you guys get to know what is going on in my mind and what questions that come up monthly for me. And I just try to get that, and hopefully a couple of y'all benefit from it. But one thing I heard this week that I would like to find out more information on, some lender out there was talking about delayed funding. I had never heard that before.
Delayed funding.
Delayed?
means the lender ain't got any damn money.
No, that is not what it said.
That's what it
Delayed
means to me.
financing or delayed funding or something like that. I'm gonna let you
Why
see
would
that
you want a
information.
lender with delayed funding? Is my first
They said it was. I don't
knee
know.
jerk reaction to that. But anyway,
Okay. Well,
let me tell
anyway,
you this though. In our staff meeting yesterday, we talked about having an event for the end of the year.
Yep.
There's an event next Thursday night. There's probably been others, but it's the first one I know that's gone out of their way to advertise a public meeting next Thursday. And I was notified about it today. Dallas had one last night, and they got a really big one going Tuesday up there. So things are starting to creep back in, but we kicked around having a meeting for the end of the year. we'll talk to you about it and see what
Okay.
what Renter's Warehouse thoughts are.
Ask if they
We
You know,
made no decision. We just kicked it around. What's that?
ask them if they go.
Well, yeah, that's a good survey question. If we had an event before the end of the year, and
Would
I'd
you
like to
come in
make it
person?
festive, would you come? And would you feel in danger? If I do it, we do it, Jet does it, we're gonna have it at a nice place and have some beers and you
Yeah,
know,
like McDonald's or something.
yeah, do something and nice and I don't know. Let us know. Let us know. Would you come?
Another thing
me and you would talk about it, how we want to do something together and
something I've wanted to do for years that you and I've talked about in the past. Yeah, grow up.
yeah.
Is an expo, a real expo, because
yeah.
there are some expos that go on that I think don't bring a whole lot of value.
That's right. They're in it for the
And I think
purely the money.
I think the whole day or two expo with vendors,
Yeah.
with vendor meet and greets, all that's included. There's a lot of value there, and just by getting the right breakout sessions going, you actually get real good quality info versus just whoever wants to pay to do the breakout. Because most of these events, if you want to do a breakout, you just pay money and you can do a breakout. Well, okay, maybe you do have to charge them to make the finances work, but I want to see what kind of content they're bringing and whether it's going to be valuable.
Yeah,
an expo would be a neat idea.
I love making a profit. Ain't no doubt about it.
Mm-hmm.
I mean, you can't be in this business and not be inspired by the profit.
Absolutely not.
But this is not just today with me. It goes way back. Mine and your relationship. Rich Drake helped me more than anybody when I got in this business. And I've said it publicly. I'll say it tonight. The guy helped me. He didn't have to. He was a mentor. He had done probably when we met 400 or 500 houses probably. And he helped me. That's one of the reasons today that we're friends. And I like helping others.
No,
I don't mind it.
You've helped me just as much.
I don't mind it. I mean, my phone will ring back there in my office, and I don't catch every call, but I catch a call, and it'll be somebody on the phone. I may be honest with you. They'll say, "I can't believe you answered the phone." Well, sure I did. Why wouldn't I? But I'm such and such. I'm a newbie. Can I ask you a few questions? Sure. No problem. It's not a problem. And I do it. It's every day.
Awesome.
You're the man to put this together, and we appreciate you.
Thank you.
We appreciate you.
Likes and loves,
Mr. Curtis
shares.
We wouldn't be doing this today if it wasn't for Curtis.
Yeah,
That's the honest truth.
I remember when you
That's
first
the honest truth,
came up with this idea.
And Curtis is with us, and he's a brother, and he runs it. It's his show. We just here for commentary.
Yeah.
And to tell me, wait a minute, whenever I want to move on to the next question.
Well, I don't mind correcting you.
No, you don't.
Well, he's wrong most of the time. So
Well,
It's my show, but it's none of my
you
content.
Only chance he got out of education.
Listen to me talk.
Us talk.
All right, Augustus.
All right, everybody. Jet Lending needs to loan some more money. We'd love to hear from you. With rentals, flips, commercial. Renter's Warehouse would love to manage some more properties.
Yep, bring them on.
Curtis,
I would love to build some more properties.
there you go.
And be looking out for the show Nailed It with Alex in the Jet Lending podcast studio.
All right. Bye-bye. We're out. Okay.